name is Trevor Kuresa. I am a corporate and tax attorney with TaxRx Group. I spent the first decade of my career practicing corporate and tax law at a Chicago law firm and at Deloitte. I then transitioned into general counsel roles for 5 years. Immediately prior to joining TaxRx Group, I served as general counsel for a large DSO. I joined TaxRx Group to help dentists navigate complex legal frameworks and maximize their tax strategies. Our mission at TaxRx Group is to guide healthcare professionals through the entire life cycle of the R&D credit. We are here to discuss the legal framework of the R&D credit under Section 41 of the Code and its application to dental practices. The R&D credit was originally enacted by Congress in 1981. It has undergone a complex 45-year evolution shaped by shifting congressional intent, Treasury regulations, and tax court cases. Historically, the R&D credit has been viewed primarily through the lens of heavy manufacturing, software engineering, and pharmaceutical development. However, as modern clinical dentistry increasingly integrates materials science, advanced bioengineering, and proprietary digital lab workflows, the boundary between standard healthcare delivery and technological innovation has evolved. To successfully claim the R&D credit, a taxpayer must demonstrate that the activities performed within a dental practice satisfy the four-part test set forth in Section 41(d) of the Code. The first element of the four-part test is the permitted purpose test. You must be trying to create a new or improved business component. In dentistry, this means improving a clinical process, a custom lab workflow, or a treatment protocol to achieve better, faster, or more reliable patient outcomes. The second element of the four-part test is the technological in nature test. The research must rely on the hard sciences: biology, biochemistry, materials science, or bioengineering. Dentistry fits this perfectly. The third element of the four-part test is the Elimination of Uncertainty test. There must be a technical uncertainty regarding the capability or method of developing the component, or the appropriate design of the component at inception. You must be asking, can we do this? How do we design this? What is the best methodology to make this work? Finally, the fourth element of the four-part test is the Process of Experimentation test. You must systematically evaluate alternatives. This means evaluating a hypothesis, testing a design, analyzing the failure, adjusting the variables, and testing again. Let's move from abstract statutory theory into practical application and analyze an actual dental activity. Consider a dental practice featuring an integrated digital lab. The project under evaluation is the development of a proprietary, automated, computer-aided design and computer-aided manufacturing software scripting protocol and multi-layered thermal sintering process to eliminate microfractures and marginal gap discrepancies in full-arch monolithic zirconia restorations. First, we analyzed the permitted purpose test. The practice identified an unacceptable rate of structural microfractures and marginal seating errors when utilizing manufacturer milling settings for complex full-arch cases. The objective of this project was not cosmetic, it was to design and validate an improved internal lab manufacturing process and customized technique to drastically reduce structural defects and maximize the physical reliability of the final prosthesis. The business component being improved is the manufacturing process itself. Second, we analyzed the technological in nature test. This project did not rely on clinical artistry or subjective aesthetics. This is evaluating the thermodynamic behavior of polymorphic zirconia during the thermal sintering cycle. This is also evaluating the engineering of custom computer-aided design and computer-aided manufacturing toolpath algorithms and milling feed rates to manipulate brittle material substrates without introducing microcracks. Third, we analyzed the Elimination of Uncertainty test. At the project's inception, the information publicly available to the lab did not establish the appropriate method or design required to achieve the desired structural outcome. Standard commercial manuals provided no guidance on how to alter geometric milling vectors for full-arch frameworks without warping the material during the thermal stage. To establish objective proof of this technical void, the practice documented that the optimal cooling curve thresholds for this multi-layered zirconia density were unestablished and actively under review in peer-reviewed science journals. Fourth, and finally, we analyzed the Process of Experimentation test. To satisfy this requirement, the practice executed a systematic research protocol. They formulated a clear scientific hypothesis by asserting that altering the cooling gradient from the manufacturer recommended would prevent internal thermal stress fractures. They engaged in the evaluation of alternatives by fabricating 4 distinct structural geometric prototypes, varying the thickness of the connectors, and altering software tool path speeds across multiple test batches. And finally, they conducted empirical testing by subjecting each prototype to microscopic marginal analysis and destructive load testing to evaluate physical failure limits. The most frequent point of failure in audits is satisfying the third element of the 4-part test, which is the Elimination of Uncertainty test. The IRS has provided that technical uncertainty exists if the information publicly available to the taxpayer does not objectively establish either the capability or method for developing a business component or its appropriate design. In plain terms, it means you cannot claim the R&D credit for doing things that are already solved, documented, or commercially available in the general dental community. To qualify, you must be facing a technical problem that you cannot fix simply by looking up the answer in manufacturer's manual or a standard clinical protocol. Under audit, the IRS will argue that the information to perform this procedure already existed in the general dental community. Therefore, you face no true technical uncertainty. If your defense relies solely on internal clinical narratives, then you are in a highly precarious position. To construct a defense, we look to clinicaltrials.gov, a registry maintained by the National Institutes of Health. When a dental practice is analyzing qualifying R&D credit activities, we believe the first step should always be an exhaustive review of active clinical trials. If a university, a research hospital, or a major medical device manufacturer has an active, unresolved, or ongoing clinical trial registered on clinicaltrials.gov, regarding the exact clinical problem you are trying to solve, then you have just secured objective, external proof of technical uncertainty. This provides the necessary substantiation to support your claim. We believe this provides leverage under audit. If a protocol is currently under active investigation in a registered clinical trial, the appropriate design or method has not been established. The scientific community itself has formally declared that the outcome is uncertain and the Elimination of Uncertainty test is satisfied. We've discussed the 4-part test, but I want to highlight the concept known as adaptation. Adaptation is the difference between everyday clinical dentistry and qualified R&D activities. Adaptation activities do not qualify for the R&D credit. For example, the fabrication of a custom crown tailored to an individual patient's mouth is the routine adaptation of existing technology to a consumer's needs. This is highly skilled clinical dentistry, but it is standard practice and not research and development. Accordingly, this activity does not qualify for the R&D credit. Now that we have discussed the 4-part test, let's transition to what drives the dollar value of the R&D credit. For a dental practice, the wages of you and your staff drive the dollar value of the R&D credit. The higher the wages, the larger the R&D credit. We review your tax returns to determine you and your staff's wages. Next, we conduct a detailed assessment of the specific day-to-day activities performed by you and your team. Rather than looking vaguely at job titles, we isolate the exact technical tasks that qualify under the R&D framework. This ensures that every dollar claimed is backed by qualified technical work. Once we determine the precise percentage of time each staff member allocates to qualified activities, we apply that time tracking allocation directly to their wages. This calculation isolates the true R&D portion of your payroll, turning routine practice overhead into the R&D credit. In the event of an audit, the defensibility of your R&D credit rests entirely on the quality of your evidentiary record, which is known as the R&D credit report. The IRS has repeatedly signaled that it will target generic, boilerplate reports that fail to tie specific expenditures to qualified activities. The IRS does not look at the size of your R&D credit. They look at the quality of your R&D credit report. To establish a good audit defense, your R&D credit report should include written evidence defining the precise technical uncertainty under evaluation, the specific alternatives tested, and the qualitative or quantitative results derived. In other words, your R&D credit report should demonstrate that the 4-part test was satisfied. Your R&D credit report should also include documentation separating distinct technical research initiatives from the general operational overhead of the practice. Finally, your R&D credit report should include clear accounting records, linking specific employee hours and supply invoices directly to the corresponding qualified research projects. Let's talk about the most important question that every dentist and tax advisor asks before moving forward. Does claiming the R&D credit increase exposure to an audit? In my opinion, the answer is no, but the answer requires an understanding of current IRS tax administration and algorithmic data matching. Under recent enforcement guidelines, the IRS has systematically shifted its examination strategy from random enforcement to systematic algorithmic screening. The IRS evaluates tax returns based on data variance, statistical anomalies, and the presence or absence of mandatory reporting disclosures. To achieve this, the IRS has fundamentally restructured Form 6765, which is the form used to claim the R&D credit. They have introduced Section G, which is designed to capture granular, project-level metrics directly on your tax return. If a taxpayer files an R&D claim using vague, aggregated top-line numbers without project-level specificity, the IRS's automated screening algorithms will flag that return as high risk. However, if a taxpayer proactively designs its R&D credit to align with Section G requirements, such as mapping clear employee hours and technical objectives to distinct clinical or workflow innovations, then the audit risk drops. In my opinion, claiming the R&D credit does not inherently expose you to audit risk. Rather, failing to substantiate the R&D credit claim according to statutory and compliance guidelines is what creates the audit risk. If you are interested in the R&D credit, then please visit our website at TaxRxGroup.com to explore our services. You may also email me directly at tkuresa@TaxRxGroup.com. Thank you.